let's talk about transitioning from an LLC to partnership. What are the potential tax implications? The thing is that every year, tens of thousands of American entrepreneurs are contemplating this transition. In other words, they're going from LLC to partnership. So in today's conversation, I want to clarify for you the potential tax implications that you might have under this scenario. Okay, so here's the approach I want you to pay attention to. So when we talk about the transition from LLC to partnership, there are three main criteria that you really have to think about. So you have the fiscal aspect of things. So that's the tax implication. You got to think about the operational aspect of things. So the daily management of managing an LLC versus a partnership. And then you got to think about the regulatory aspect of things. In today's conversation, of course, we are just addressing the fiscal aspect of things, but you have to really have those two items also in your mind, okay? The regulatory and the operational. The thing is that when we talk about LLC and partnership, those two legal structures are happening at the state level, not at the federal level, at the state level. So when you actually, the way you form an LLC in New York is not the same way you form an LLC in California or in Georgia or in Louisiana or in Illinois, okay? And so it's the same thing when we talk about partnership. The way you form a partnership in New York or in California is totally different from other states. So it's one of those things where you have to look at the state, the regulatory aspect of things at the state level. So what kind of forms do you have to file? And the thing is that when we talk about regulatory implications at the state level, you also have some fiscal implications at the state level, because the tax implications from transitioning from an LLC to a partnership are not just happening at the federal level. You also have some state implications. Some states will be charging you more in terms of income taxes, excise taxes, or sales taxes, or other types of taxes. In some cases, you have something called franchise fees. It really depends upon the state, okay? And you got to really think also about what sort of changes you have to think about in terms of filing an annual return, and so on and so forth. So think about those three things, okay? Tax implications, operational implications, and also regulatory implications. One thing I want to say real quick here is that the most important element is that you want to pay attention to what happens at the federal level, okay? So basically what's going to happen here is that you first have to see what kind of, are you filing, are you a single member LLC? Are you a multi-member LLC? Because this will have an implication, whether you are filing Form 1040 Schedule C or whether you're filing Form 1065 Schedule K1. Very important. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So I want to quickly talk to you about the strategy you need to think about. So what are the tax implications of LLCs? And so I want to talk about that. So the thing is that when we talk about LLCs, you have several ways to analyze this. I want to quickly talk to you about the fact that you got to ask yourself, am I a single member LLC transitioning to a partnership, or am I a multi-member LLC transitioning to a partnership? So if you're a single member LLC, as I just said to you, you normally file your tax returns right now by filing Form 1040 and Schedule C, reporting your income and expenses that you actually that you actually had through the LLC. You report that in, let's say, in your Form 1040. If you're a multi-member LLC, you actually have to file, of course, Form 1065. This is a partnership, and then you have to also report your Schedule K1. It's really important to understand that if you are a partnership, it really depends upon the classification, the tax classification that you have at the federal level. Because if you're a partnership, you can still file a 1040 Form Schedule K1, a Schedule C rather, or you can file a Form 1065 Schedule K1. And so the thing here is that it really depends on whether or not the IRS is looking at your LLC as a disregarded entity or as a partnership. So if you want to transition from LLC to partnership, you got to really see your current status. Are you a disregarded entity in the eyes of the IRS, or are you a partnership? So if you're a disregarded entity, then there's no big sort of change when you actually transition into becoming a partnership, whether you have a limited partnership or you have a general partnership. you will still file your taxes normally as a schedule. You'll be reporting your income and expenses on your Schedule C, Form 1040. Now, if you were, let's say, if you're currently, if the IRS views your LLC as a partnership, when you transition to a regular partnership, it really depends upon the kind of partnership, the kind of settings that partnership has. You can still file Form 1065, Schedule K1, or you can file Form 1040, Schedule C. It really depends. Boss, I want to quickly talk to you about I want to remind you of today's topic. We are having a conversation about transitioning from LLC to partnership. What are the tax implications? So I've already established that at the federal level, the tax implications depend upon how the LLC is viewed by the IRS, right? If the IRS views the LLC as a disregarded entity, or whether or not the IRS views the partnership, view the LLC rather as a partnership. So those are the tax implications at the federal level. Now let's talk about at the state level. So you have a common state taxes, and again, when we talk about state taxes, every state has different taxes imposed on businesses and different ways of calculating the tax due. And so common state level taxes include income tax. So basically, when you transition from LLC to partnership, you still need to consider paying state income tax. So income tax can be classified as either corporate income tax or individual income tax. So for those businesses or business types that pass through business income to the individual owners, such as LLCs and S corporations, individual income tax is paid. So whether you transition from LLC to partnership, you still need to pay income taxes. This is really important. You also have another the state tax that you have to consider. That's franchise tax. So a franchise tax can be imposed on corporations, LLCs, S corporations, and so on and so forth, and even partnerships. Okay. And the thing here is that it really depends upon the state. And one thing I want to say here is that franchise taxes also apply to companies that are registered to transact business, also called foreign qualified in other states. So what I'm trying to say is that if you are an LLC registered in New York and you are transacting in Georgia, you might still be charged a franchise tax. It really depends. So you have also sales tax. So you have income tax, you have franchise tax, you have sales tax. So there are different types of sales taxes, and some are paid by the seller while others are paid by the buyer. And so use tax, while sales tax applies to retail sales that happen within that state, the use tax applies to storage or other use of tangible personal property or taxable services in a state. You also have property tax. So most property taxes are used to fund local governments versus the state government, but should also be considered as a tax obligation your business will incur. So basically, when you transition from LLC to partnership, you have several tax implications at the state level. You have income tax, you have franchise tax, you have sales tax, you have use tax, you have property tax that you have to consider. So this is regardless of when you do the transitioning, you still have to consider those taxes. This is really important. Now let's quickly talk about how our corporations taxed under the Internal Revenue Code. So by default, all corporations are taxed on the subchapter C of the Internal Revenue Code. So basically, that's what we call double taxation. Okay. So when you transition from LLC to partnership, you are quote unquote escaping double taxation because you're not transitioning from LLC to a corporation. You're going to a partnership. So a partnership is not actually taxed as a subchapter C. So that's really important to really think about that. Now, let's talk about how our S corporation taxed. The thing here is that S corporations are taxed similarly to LLCs, depending upon because they have the single, what we call pass-through taxation. So, or single taxation, not double taxation, but single taxation. In other words, an S corporation can actually choose to file Form 11S, Schedule K1, and just pay taxes at the individual level. This is kind of important. So the individual, let's say the entrepreneur, pays taxes at the individual level by filing Form 1040, Schedule C, by transferring all data from Schedule K1 onto Schedule C. One thing I want to say here is that now let's talk about how our LLCs taxed. Well, LLCs are taxed depending upon I would say the setup. Okay, if you have a single member LLC, you are by default considered a disregarded entity in the eyes of the IRS. So basically, you are going to file as if you are an individual. So you will actually transfer, as I said before, your income and expense items on your Schedule C Form 1040. If you are a multi-member LLC transition into a partnership, the IRS already sees you as a partnership. And for all intents and purposes, the IRS will be expecting from you Form 1065. Okay, Form 1065, then you have to actually, Form 1065, I just want to say, it's an informational return. So you file Form 1065, and then you actually also file Schedule K1. Now, each member of the LLC, of the multi-member LLC, will have to report income and expense items on his or her Schedule K1 onto his or her Schedule C, Form 1040. So this is kind of important to really understand. And one thing I want to say here is that when we talk about transitioning from LLC to partnership, once you actually go from LLC to partnership, it really depends on the status of your partnership now. If your partnership is now, let's say, is a general partnership, then you might have to file as an individual Form 1040 Schedule C. Or if the partnership is set up as a general partnership, then you'll still have to file from 1065 and still with the Schedule K1. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about transitioning from LLC to partnership. What are the tax implications? Now let's talk about what LLCs can elect to be taxed as S corporations. In some cases, you might say, you know what, I instead of a transition from LLC to partnership, I want to transition from LLC to S corporation. Now the thing here is that you need to understand, when we talk about the S corporation, you have a pretty straightforward sort of regimen of tax duties or tax implications. Okay, not every LLC can elect to be taxed as an S corporation, whether you have an LLC or a corporation for that matter. So if you are an LLC or you're a corporation, you must have 100 or fewer shareholders to be eligible to be an S corporation. And so note, members of the same family can be counted as a single shareholder. So shareholders have to be individuals and have to be United States citizens or resident aliens. Now the thing here is that when we talk about that, so when we talk about shareholders, this is for corporation. But when we speak about LLC, we're speaking about members, okay? And so one thing I need to say also is that there can only be one class of stock in the S corporation. You can, however, have classes with different voting rights, but you cannot have one class of stock receive a dividends or any other financial advantage while another member does not. Okay, and so now one thing I want to say here is that there's some kind of impact of timing of S corporation election. And now, if you do not elect S corporation status when you form your corporation, you may have to deal with the built-in gains form from when the corporation or LLC was taxed as a C corporation or as an LLC. And if this is the case, you should work with a tax advisor to ensure all the potential tax issues are addressed. Or you can just let us know in the comment section below, and one of our team members will certainly get back to you. One thing I want to say here is that you always have to understand, when we talk about transitioning from LLC to partnership, you always have to pay attention to your current status. Are you a single member LLC or are you a multi-member LLC? That's number one. Number two, are you basically transitioning to a general partnership, or are you transitioning to a limited partnership? That's number two. Number three, what are the state implications, the state tax implications? Because state taxation of a partnership or LLCs are different. Okay, so if you let's say if basically you were to go into a state, and also one thing I want to say here is that your status within the state also matters. Are you a foreign LLC, or are you let's say a local, if you will? Are you a domestic LLC? So one thing you need to really pay attention to here is that it's all about how you are. Let's say you are setting up the transition. you need to understand in some cases, you might want to actually consider S corporations rather. Instead of transitioning from LLC to partnership, you can say, you know what, I think it's just a lot more advantageous to me from a fiscal point of view to transition to an S corporation. Now, one thing I need to say here is that if you form a corporation or LLC and then file an election to be taxed as an S corporation for federal purposes, don't automatically assume your state will recognize the federal election. Most states will follow the election in assessing state taxes, but a few do not. Okay. In addition, even if they permit taxation as an S corporation, they may require a separate state election before they will recognize the federal election. So those are things you need to really think about. Also, a few states impose a special tax on the income of every business. So whether the form of an entity or something else. You should find out if this is the case in the state in which the entity will be formed and the state in which it will be doing business to get a complete picture of what your entity's tax liability will be. Now let's talk about another important element when we actually mention transitioning from LLC to partnership. The tax implications you need to really pay attention to at the federal level, but also at the state level. Let's talk about accumulating or retaining too much in earnings. This process can increase your tax liability. Okay, so the thing here is that in an LLC or in a partnership, for that matter, basically you have the chance to say, you know what, I want to just distribute my earnings, or I just want to keep it in the LLC. One thing you need to understand here is that basically when you do not file, when you do not actually, if the IRS sees your scheme as a way to actually not pay taxes, they can actually do some review, they can do some audits, whatever, and potentially increase your tax liability. Okay, it's one of those things where you need to understand the IRS always has to pay attention to the fact that they have a system, they have a criterion called the reasonable need of a business, the reasonable compensation of an entrepreneur. So if you're an LLC member and you basically are making money, and the IRS sees that you're not actually distributing some kind of compensation or some kind of dividends or some kind of equity return to the members, then this will invite some kind of scrutiny. This is really important. But the thing here is that you need to understand it's all about you being able to justify to the IRS that you are retaining the funds within the business, within the LLC, because you want to maybe further grow the business, or you have other means. But it has to be reasonable. It's all about being reasonable. One thing I want to say here is that when we talk about transitioning from LLC to partnership, it is still the same thing. Once you become a partnership, whether you are a general partnership or you are a limited partnership, basically, if you retain too much revenue, too much earnings within the business and do not distribute it, this will invite a scrutiny from the IRS. Because the bottom line here is, if the company is making money and people are working hard, they must be compensated. And there is always the element of reasonable compensation. This is really important. Now, one thing I need to say here is that when we talk about LLC, remember that members can opt out of default LLC tax classifications. LLC owners, single-member LLCs or multi-member LLCs don't have to take any action at all if they are happy with the default classification. What's the default classification? Default classification, single-member LLC, disregarded entity, so that's Form 1040, Schedule C. Multi-member LLC, Form 1065, Schedule K1. Now, however, any LLC can elect to be taxed as a C corporation or S corporation. Okay, you always have that option. And even if you become a partnership, you still have that flexibility there. Let me further say that most states follow federal taxation rules for LLCs. So when you are considering transitioning from LLC to partnership, you need to understand that the state laws, the state tax laws that will apply to you are kind of similar. They're kind of akin to what's happening at the federal level already. Nearly all states follow the lead of the IRS with respect to LLCs in assessing state income taxes. Thus, the LLC automatically will be presumed to be a disregarded entity or a pass-through entity for state income tax purposes, in this states, and no state corporate tax is imposed. And so whether you transition from LLC to partnership, the configuration will still be the same. In addition, if an entity classification election is made, it will be honored in most states. Okay, and based on our research, we haven't seen a state that's really thinking too differently from what the IRS has said. And so you also need to consider self-employment tax when selecting entity type and tax classification. This is something I haven't mentioned so far. So, self-employment taxes are one tax issue to consider when deciding to choose an LLC or a partnership, or to transition from an LLC to a partnership, and then in deciding how the LLC or partnership should be classified for tax purposes. So the members of an LLC who also actively work for the business are considered owners, not employees. They must pay self-employment taxes for Social Security and Medicare on the income they receive from the LLC, both income received as salary and as a share of the profits. This is kind of important. And so in a corporation, really, just want to quickly remind you, the employees who work for the corporation are considered employees, even if they are also shareholders. And they also only have to pay Social Security, Medicare taxes on their salary, not on any distributions of profit. The owners of some LLCs will elect to be taxed as a corporation, usually an S corporation, if the LLC qualifies, because the difference in self-employment taxation provides them with what they consider a significant tax saving. Okay, so you also need to think about fringe benefits and retirement plan options vary depending on tax status. So whether you are thinking about transitioning from LLC to partnership, also think about the fringe benefits part of things. Boss, thank you so much for your attention. I really appreciate it. Let me quickly do a recap of today's conversation. I was talking to you about transitioning from LLC to partnership. What are the tax implications? So I gave you the approach, the strategy you need to think about, and the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.